The golden age of America begins right now.
We have the real potential here for golden age.
We really do.
We really do.
Yeah.
So, is this a new golden age?
Let's talk about entering America's golden age.
And that's why we have the ushering in of a new golden age that starts in 5 days.
Financially speaking, there's been a few previous golden ages for America, depending on your definition. In this video, I'm going to show you some fundamentals, some technicals, and some sentiment gauges. We're going to look at how current conditions stack up to those prior times. Hey guys, I'm Brian Whitmer. I have been forecasting markets with Elliott Wave International since the '08 financial crisis. And given the expectations for this new golden age, I thought it was a good time to provide some perspective. Let's look at fundamentals first. I really like this graph from last month's financial forecast. The data comes from Simon White. He's a macro strategist at Bloomberg. I like it because it is comprehensive, right? We're not just looking at one metric of valuation, we're looking at 7, and we're not just looking at 10 years of market history, we're looking at over 100. Even on that time scale, this year left its mark. The market is more overvalued than 1966, more overvalued than 1999. We're on par now with 1929. So at least in terms of stock performance, the last decade has been a golden age. This is a pretty good example of what the socioeconomic theory of finance referred to as hindcasting, right? As opposed to forecasting, most people are simply expecting the market to keep doing what it has already done. Now, another interesting piece of the puzzle I've mentioned in recent videos that famous short sellers have simply given up on this market, right? Jim Chanos closed his fund a year ago. Hindenburg Research closed last month. The Wall Street Journal has picked up on this story. They call short sellers an endangered species. Those are anecdotes, but we can also view this quantitatively, right? This chart is also from the latest financial forecast. It shows the positioning of asset managers in S&P futures. We had over 1 million net long contracts at the end of November. There's essentially been 3 previous surges of optimism since 2015. First 2 coincided with market highs. The surge in June 2021 coincided with tops in SPACs and meme stocks, the more speculative sectors. And here we are at another extreme. Now, I've got one final chart that captures the extent to which investors are taking on risk. This one tracks assets under management in triple long equity funds. So these are leveraged vehicles, right? They're designed to triple the returns in stocks. Current assets 6 times levels seen in 2018. Now, the losses in these vehicles, they also get tripled if stocks decline. But of course, it's a new golden age and nobody has time to worry about that risk. So just to summarize here, the long side is an extremely crowded trade, a highly leveraged trade. Virtually no one is short. And all of this is taking place amid valuations that rival some of history's generational peaks. Take that for what it's worth. You'll have to decide for yourself the likelihood of a new golden age beginning in this environment. If you're interested, we show dozens of these kinds of sentiment gauges every month in our newsletters. And more important, we put them into context with Elliott Wave patterns and other market technicals. I'll post links to subscribe to our services in the comments. Thanks for watching, and I'll see you in the next video.